Okay, welcome to chapter 1-2, where we're going to talk about journalizing and posting purchases and purchasers' returns. Some of this is going to be a review, and some of it will be slightly new because we are talking about using a departmental accounting system, which is kind of our new piece here in advanced accounting. So as we head over here, remember that what we're doing in the advanced accounting book is looking at managerial accounting. So how does management use the information? Because in accounting one, what we had always done and through part of this class has been financial accounting, which is reporting information for outside users. So we're worried about what's happening on the inside now. So when a business has two or more departments, accounting information can help management decide whether a department's performance is acceptable or unacceptable, mainly talking about um, are these departments producing a profit, particularly when it comes to merchandise. So the different forms of merchandise. We're going to talk about our sample company that's called Wiley's, and they specialize in merchandising of grills and then also of furniture. So they want to know, are these departments performing well, or are they underperforming? So when we have a departmental accounting system, essentially what we have is an accounting system showing accounting information for two or more departments. So in a departmental accounting system, we can actually figure gross profit by each department. And that's where we're able to figure out, are these departments performing acceptably or unacceptably? So for that reason, our general ledger is going to look a little different because we have to include a number of separate departmental accounts where we maybe only had one before. So here just I listed some common firms that might be organized as a departmental basis. If you think about shoe stores, you might have dress shoes, you might have sports shoes, you might have boots, you might have children's shoes. Same thing with all the different types of furniture or computers or department stores or sporting goods. You can see how they have all these different departments, and they want to know if the merchandise they're carrying is turning a profit for their business. So remember that a merchandising business is simply a business that purchases and sells goods. And like I said, our company is going to be called Wiley, and they sell grills and outdoor furniture. Um, Wiley is a corporation, so we're not worried about sole proprietorships. We'll have all of our normal accounts of a corporation, and it's organized on a departmental basis, which means that we have departments specialized for grills and furniture. So what that means is that account information is going to get recorded and reported specifically to those two departments. One is grills and one is furniture. So all accounts for the grills will be have the title grills after it, and same thing for furniture. And you'll see what I mean as we get into this here. So there isn't exactly a copy of all of the chart of accounts for Wiley, but if you look at page 3 of your book, you'll see it there. And they just want to review the file maintenance numbering system with you real quick. So here's an example. Instead of having just one merchandise inventory account, we have merchandise inventory for grills, and then we have a merchandise inventory for furniture. The merchandise inventory grills has an assigned number of 1305. So if you remember, the first digit indicates that the account is an asset. Okay, we have assets, liabilities, stockholders, equity, revenue, expenses, and then we also have other, which is a 7,000s. The second digit, which is the 3, indicates the account is in the third category or inventory accounts of the asset division. So you have to know within the asset division what comes first. Well, we know cash comes first, then receivables, then it's merchandise, and it goes from there based on liquidity. And then the last two digits, which is the 05, show the location of the account with respect to the other accounts in the inventory account category. So within merchandise inventory, where does the 05 hit? So it's the fifth one down for gross. Okay. So what we need to remember is that all departmental purchases of merchandise on account get recorded in a purchases journal. That's our special journal. We've talked about that before. Remember, only purchase of merchandise on account. That's the important one. But when we have done this before, we've always had a purchases debit and an accounts payable credit. What's going to be different about this one is that each purchase has a notation placed on it showing which department it goes to. Because remember, we're going to have purchases for grills and we're going to have purchases for furniture. And so that's just what that says, is it has a separate purchases debit column in for each department in its purchases journal. So if we look at this, oh, it does it automatically this time. That's fancy. So it says our transaction was on May 1st. We purchased furniture on account from Backyard Furniture Manufacturing of 1869.35, purchase invoice number 675. So here's our purchase invoice from Backyard Furniture Manufacturing. It's shipped to us. Here's our Wiley Outdoor Living Company. When we receive our invoice, what we do is we stamp it. So it gives the initials of who it was received by, the date it was received, the document number, which is invoice number 675, and then our department number, or a department, excuse me, this is going to furniture. So remember, we have purchases for grills and we have purchases for furniture. So it talks about the approval date. That's what we stick on here when we received it. The vendor name obviously is coming from Backyard Manufacturing. Our invoice number is 675. Again, that's coming from right here. And then our invoice amount, our invoice amount is the 1869.35. And then this is what's different. If you notice down here, I'm actually going to back up one so you can see this. Remember before, this was just accounts payable credit and purchases debit in one column. Instead, now we have a purchases debit, which can either go to grills or it can go to furniture. And that's the major difference in our purchases journal when we're doing departmental accounting. So here it goes to the invoice amount, and you can see what happens here. Purchases is going up, so is accounts payable, but so is the accounts payable ledger or a subsidiary ledger for Backyard Manufacturing. So nothing is really changing except for the fact that you have to be aware of what department is it in. Is it grills or is it furniture? And depending upon what your problem is in application or mastery, just make sure you pay attention to that. So then when we post, the only difference is that instead where we used to put the one number goes to either accounts payable credit or accounts or purchases debit. Instead now we have to make sure that we put it in the correct purchases account, either for grills or for furniture. But the posting from a purchases journal is the exact same as it was that we've done before. So this shouldn't be anything new. Don't forget to put P for purchases and whatever the journal number happens to be. But that's pretty much all the same. And same thing for our totals. Like I said, it's either going to go to purchases grills or purchases furniture. So we just want to make sure that we do that correctly. Now remember, when we make purchases, there is always the opportunity for us to return the merchandise for any reason. Maybe we bought too many, maybe it wasn't up to snuff, whatever it happens to be. But when merchandise is returned to a vendor, remember that the vendor's account and the accounts payable are reduced by a debit. So don't forget that purchase returns and allowances is a contra account. A contra account, remember, is an account that reduces the related account on a financial statement. And the reason we keep that separate is so that we have a separate account to let us know how much merchandise we've actually returned over the course of a fiscal period. So you can see what happens is our accounts payable goes down with a debit because we don't owe them that much anymore. We're returning it. And then our purchase returns goes up with a credit. Because remember, purchases is a normal balance of a debit. So since it's a contra account, it's the opposite of that. So when we return merchandise, this form gets prepared by us, the customer. So remember, we are the customer in this situation, and we send it back to our vendor, which is Gelmer Corporation. So we call this a debit memorandum. It simply says that we decided to return 6 of the item number A253, which is a 42-inch grill cover. Each of them was $19.99, so 6 of them total is $119.94, which is where we get the amount that was in our purchase returns and allowances. So that brings us to the end of 1-2. We're going to head over and do our work together. Again, it's going to look a little bit different than it has in the past, but we'll walk each other through it. So I'll meet you over there.